Welcome back to the deep dive. Today, we are not just looking at the market, we are diving headfirst into the volatility that really shook things up.
We certainly are. We're going through reports from the Seoul Economic Daily because what we all saw on the 14th, well, it wasn't just a small dip.
No, it was a major event. It completely wiped out billions of dollars in value in a single session.
It really did.
Yeah.
The market was hit hard, mostly, dragged down by a big reversal in New York tech, and that had a huge knock-on effect for both KCOSPI and KOSDAQ.
Just to set the scene, the KOSPI index saw its sharpest drop since that tax reform shock back in August. It fell, almost 3.9%.
And KOSDAQ was down over 2%. But the really stunning number is the KOSPI market cap. Something like 131 trillion won just evaporated.
That's about 100 billion US dollars. When you see value disappear that fast, you know it's more than just a bit of profit taking.
Exactly. This wasn't a single event. Market analysts are calling it a triple threat. It was sort of a perfect storm of factors that all hit at once.
Okay, so a triple threat. Let's unpack that. What were these three elements and how did they manage to scare away so much of the big money?
Well, the first threat was ongoing currency instability. When the exchange rate is all over the place, it creates a lot of uncertainty. It fuels liquidity concerns.
People get worried that money is about to flee the country.
Precisely. And that's a huge incentive to sell off your riskier assets fast.
Okay, so that's threat number one. What was the second?
The second one hit right at the heart of the recent rally. It was this growing fear around the AI bubble theory.
Right, the idea that valuations, especially in semiconductors, have just gotten way ahead of themselves.
Exactly. So much capital has poured into AI, and the fear is that those valuations just aren't sustainable. That anxiety really peaked when big global names like NVIDIA and Tesla took huge hits in the U.S. session right before ours.
And the third threat, I'm guessing it's the usual suspect.
It is central bank policy. The market has been, sort of banking on the U.S. Fed starting to cut rates soon.
That's been the safety net.
Right. But that safety net is starting to look a little frayed. We heard some more hawkish comments from Fed officials suggesting that the path to easier money is probably a lot longer than the market was hoping for.
So you've got fear of money leaving, fear that valuations are inflated, and fear that the cheap money isn't coming back anytime soon.
It's the perfect combination for a sell-off. And that's just what we saw. Foreign investors sold off a staggering 2.3 trillion won.
The largest sell-off in over 4 years.
An incredible amount. And institutions added another 900 billion won to the selling pressure.
And that selling was really focused on the big blue chip stocks, wasn't it?
Oh, yes. Especially semiconductors. SK Hynix was down 8.5%. Samsung Electronics fell over 5%.
But here's the really interesting part of the story. While the institutions and foreign investors were heading for the door, the individual retail investors, they did the opposite.
They stepped in. The ants, as they're known, they net purchased over 3.2 trillion won. It was a massive effort to try and defend that psychological 4,000-point level on the KOSPI.
So the big question is, was that a rational move? Or just an emotional defense of the market?
Well, that's what everyone's debating. But some technical analysts would say there's some logic to it.
How so?
Researchers at Shinhan Investment pointed out that stocks like SK Hynix and Samsung had been in technically overbought territory since September.
Meaning their prices had risen too far, too fast, and they were due for a correction anyway. They use the RSI for that, right? The Relative Strength Index.
That's the one. And this big drop basically reset that RSI, bringing it back down to a more normal level. So you could argue it was a necessary technical cleansing.
So looking ahead, the market's kind of holding its breath. What's the one event that everyone is watching to see where we go from here?
It's unanimously NVIDIA's earnings report. It's scheduled for the 19th U.S. time.
Because the AI bubble fear was such a huge part of this sell-off.
Exactly. NVIDIA's results will be like a report card for the entire AI sector. If they miss expectations, it could kick off another round of selling. But if they deliver strong guidance,
it could restore confidence pretty quickly.
It could.
So in this kind of high-stakes environment, what are the experts recommending? What's the strategy?
The consensus seems to be forming around what's called a barbell strategy.
Okay, explain that. It means holding two very different types of assets at the same time.
That's right. On one end of the barbell, you have your high-risk, high-return assets like those volatile tech stocks. You don't want to miss the upside if the AI story continues.
And on the other end?
On the other end, you have stable, lower-risk, dividend-paying stocks. They act as a sort of ballast for your portfolio, providing stability and income while you wait for the volatility to die down.
That makes sense. A way to manage risk without sitting completely on the sidelines.
And despite all this short-term pain, it's worth noting that some long-term views are still incredibly optimistic.
You're talking about that Citi report.
Yes. Global investment bank Citi recently upgraded their KOSPI target in a huge way. They raised it from 3,700 all the way to 5,500.
Wow. And their reason.
Their view is that this memory semiconductor boom isn't just a temporary thing. They see it as a multi-year structural wave that will drive Korean corporate earnings all the way through 2026.
A very different picture from the short-term panic. Now, there's another structural issue this drop really highlighted, and that's the growing gap between the KSPI and the KOSDQ.
Yes, the divergence is getting worse. Over the last month, daily trading volume on the main KOSPI market shot up 61%. For KOSDQ, it was only a 37% increase.
So all the money, all the liquidity is flowing into the big KOSPI stocks.
It really is. The KOSDQ is being left behind because of its structure. It's heavily weighted towards sectors like pharma and biotech, which just aren't the focus of this global AI and chip trend.
And we're even seeing major KOSDQ companies thinking about moving over to the KOSPI. That can't be a good sign.
It's a sign that reform is needed. Experts argue that things like slow delisting procedures for struggling companies are holding the whole index back and deterring long-term institutional investors.
Speaking of things getting ahead of themselves, we also saw a big cool down in thematic investing, specifically with quantum computing ETFs.
Absolutely. That's a perfect example of what happens when hype outpaces reality. The excitement was huge last month, but then key companies in the sector reported earnings that just didn't meet those super high expectations.
And the ETFs got crushed.
They did. Some were down more than 25% in a single month. It's a really stark reminder of the risks involved in these very high-growth, concept-driven themes.
Now, for the final piece of the puzzle, and it's almost ironic, despite this brutal market drop, the brokerage firms actually had a fantastic quarter. How does that work?
It's the classic relationship between volatility and profit for them. Brokers make money on volume and activity. It doesn't matter to them if the market is going up or down, as long as people are trading.
More trading means more commissions.
Exactly. And the heightened activity led to really strong third-quarter earnings pretty much across the board for securities firms. Meredith's Financial Group, for example, had a record profit.
And DB Securities' operating profit was up, what was it, something like 1,600%.
A staggering number. Even the digital brokers like Toss Securities did extremely well, becoming #1 in overseas stock trading volume.
So if we step back, what this market crash really exposed was a short-term panic, but also a necessary technical correction. The long-term view remains bullish, but there are these clear structural challenges, like the KOSDQ issue, that need to be addressed.
That's a great summary. The market is recalibrating. And I think the key takeaway for you, our listener, is that this environment really calls for a selective approach until we get more clarity from those big global catalysts like NVIDIA.
This wraps up our deep dive into the recent market drop and what it tells us about current trends.
We hope this analysis provides a valuable reference point for your investment decisions.
We'll be back soon with more fast and in-depth securities news.
Thank you for joining us.
Please note that this content is for informational reference only, and the responsibility for investment decisions lies solely with the investor.